Financial stocks could be the quarterback for a value comeback, and the future outlook for the major banks is improving, and analysts are predicting strong growth coming from the financial sector. And right now, banks are getting a lift as we are seeing a steepening yield curve, which is fueling the optimism that interest margins will recover quickly. And these financial companies have also started major share buyback programs in 2021 and were able to finish the last fiscal year with very strong results. And all of the major banks were able to beat analyst expectations for the fourth quarter of 2020. And recently, the financial sector has been heating up and has been one of the top 2 best sectors over the past few weeks. And analysts see a ton of opportunities, with the big names such as JP Morgan and Goldman Sachs seeing a very strong benefit going forward with increased profitability. And the trend in the market right now is actually in favor of the value companies. Back in August of 2020, the growth stocks were completing their biggest run ever versus value, over 44% on a trailing 12-month basis. And at this point in time, we've only made back about 15% of that growth since that high point, and analysts believe there is still a ton of room to grow for these value plays. And right now, the financial sector is trading at a discount compared to the overall market, with a 15 times forward multiple compared to the S&P 500's 22. And another analyst from the Oppenheimer Group also said that right now, he believes financials provide a ton of future growth, and specifically listed the 2 big names from the capital market industry, Morgan Stanley and Goldman Sachs. So overall, we can get a general consensus that analysts like the financial sector right now. It's been heating up as of late and are predicting the strong rebound to continue throughout 2021. So in this video, we're going to go over 4 of the top banks on the market right now that provide investors with a ton of value at their current share price. They pay some nice dividends, and over the long term are expected to return a ton of capital to their shareholders. But before we jump into that first name, I'm going to ask you to please hit that like button and subscribe. I am the Gen Z Investor, and every single day we talk about the stock market, going over different stocks you can buy and any major market news. So please hit that like button, subscribe to the channel for daily videos, and we are going to move in to bank stock number 1, which is Goldman Sachs. Ticker GS, currently trading for $334 per share, and the company has grown by 58% over the trailing 12 months. And they have a current market cap of $119 billion and are trading with a forward PE of only 11.25. And a common trend that we're going to see throughout this entire video with all big 4 banks is that they're trading with very fair multiples at their current share prices. So nothing too high and expensive, but really all around between 10 and 15 at these current levels. And this company also has a dividend yield of 1.5%. And if we take a look at Goldman Sachs Morningstar report, the company is estimated to be trading at their fair value with a 3-star rating. And with regard to the current share price, it's estimated to be very close to the estimated fair value of $339 per share. And like the great Warren Buffett has said, it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. So getting into a big name like Goldman Sachs or any of the banks in this video very close to their estimated fair value may be at a very nice buying opportunity compared to the overall market, which may be extremely overvalued at the prices that we're seeing. And although 2020 was a tough year for the entire financial sector, Goldman Sachs actually performed very well. Their total net revenues grew 22%, and their pre-tax earnings were up 18% to close to $12.5 billion in the full 2020 fiscal year. And at this current level, the company is considered a buy with 4 strong buys, 14 buys, 7 holds, and only 1 sell. And their Zacks rating is coming in at a 2, which indicates a buy. And the investment bank industry right now sits in the top 2% and is ranked 4 out of a possible 254 total industries within the market. So the investment banks are actually looking pretty strong at this current point in time. And if we take a look at their dividend, coming in at a 1.5% current yield, but it only makes up 17% of their total net income, which is extremely low and very sustainable over the long term. And over the past 5 years, their average dividend growth rate is coming in at around 14%, which is absolutely spectacular. And going forward, this is still a major financial institution that we're predicting a ton of share price growth, and analysts are estimating over 16% per year growth over the next 5 years in the future, which would be absolutely incredible. So overall, Goldman is one of the top and most well-known investment banks in the world. They're worth over $100 billion. They continue to grow revenue year over year and may be one of the top players for a rebound in the financial sector throughout 2021. And now if we move into company number 2, we're going to take a look at one of Goldman Sachs' top competitors in Morgan Stanley. Ticker MS, currently trading for around $82 per share, and the company has seen amazing growth over the past year and is up above 75%, which is absolutely insane. They have a current market cap of $143 billion, and even after the big run-up, are trading with a forward PE of only 14, and their current dividend yield is at 1.73%. And taking a look, they are also estimated to be trading at their fair value with a 3-star rating and an estimated value per share of over $78. And similar to Goldman Sachs, Morgan Stanley also performed very well throughout the fiscal year of 2020. We can see that over that full year, total revenue came in at over $48 billion, growing 16% year over year. Their pre-tax income also grew by over $3 billion, and return on equity also improved. And taking a look, Morgan Stanley is also considered a buy, with 4 strong buys, 16 buys, and 7 holds, and we can see that no one is selling out of this company. And going forward, we're projecting annual revenue to continue to grow by over 4% in 2021 and close to 10% by year-end 2022. And in 5 of the past 6 quarters, they absolutely crushed analyst expectations for their earnings per share, beating by 42%, 30%, 75%, 30%, and 14% in their successful quarters, which is absolutely incredible. And Morgan Stanley's Zacks rating comes in at a 2 as well, which indicates another buy for this massive investment bank. And they also have a nice dividend right now, yielding 1.73%. It only makes up 24% of their net income, and their growth on that dividend has been absolutely amazing, with a 5-year growth rate average above 18%. And taking a look, Yahoo Finance is predicting over 7% annual growth from Morgan Stanley going forward, and they also have a buy rating on this company at this current level. So overall, analysts are very bullish on the investment bank sector, and companies like Morgan Stanley and Goldman Sachs are definitely worth taking a look at. They're trading near their estimated fair value, and the companies are projected to see some long-term share price and dividend growth over the next 5+ years in the future. And now moving on to the more traditional banks that consumers all across the country may use on a daily basis, we're going to take a look at Bank of America. Ticker BAC, currently trading for over $36 and has grown by 21% over the past year. They have a current market cap of $309 billion and are trading with a forward PE of 14.7, and their current dividend yield comes in at just above 2%. And taking a look, similar to the others we've already discussed, they are trading right around their estimated fair value, which is at over $37, and they maintain a 3-star rating. And something very important to note is that Bank of America is the second largest holding in Berkshire Hathaway's portfolio, which is Warren Buffett's company. And right now, he has picked Bank of America as his winner in the financial sector. He has a market value in this company above $37 billion and owns close to 12% of the overall business. And he actually sold out of his other financial positions, but during the pandemic crash back in February and March of 2020, he spent billions of dollars buying more Bank of America shares. So he clearly believes that this company will succeed long term and provide investors with a growing dividend and share price appreciation for decades in the future. And taking a look, over the last year, they actually didn't perform too bad, but in no way near the same performance that we saw from Goldman and Morgan Stanley. This is more of a traditional bank, and over 2020 fiscal year, they did see a decline in revenue from $91 billion in 2019 down to $85.5 billion in 2020, which was a drop of about 6%. And taking a look at their net income, that fell 35% or $9.5 billion, but if we take a closer look, we can see that they put away $7.2 billion in reserves, which really dramatically hurt that bottom line, but those loan losses did not come in as bad as we were expecting. And the company now in 2021 has announced that they are buying back close to $3 billion of stock in the first quarter. So in a 90-day span, they're going to return close to $3 billion of capital to their investors, which is actually the most they can do with the Fed's restrictions. And going forward throughout the rest of the year, we're expecting some high share buyback numbers. So investors right now, although we aren't seeing any dividend raises because of those limits, share buybacks are still going to be the one way banks are going to return as much capital as possible to their loyal investors. And Bank of America is also considered a buy with 5 strong buys, 13 buys, 8 holds, and only 1 sell. And taking a look, their Zacks rating comes in at a buy as well. And the major banks come in the top 20% and are ranked 51 out of 254 individual industries. And Bank of America also pays a nice 2% dividend that makes up only around 30% of their total net income. And over the past 5 years, that growth rate has been absolutely insane, averaging around 29% per year. Of course, that is somewhat inflated. The company was forced to cut that dividend back in the financial crisis, but since those lows, they have been bringing it back to a very nice and sustainable level. And over the next few years in the future, something that is interesting is that analysts are only predicting 1% annual growth for the next 5 years in the future. And I really don't believe that's fair, and over the longer term, I'm actually predicting, in my personal opinion, between 8 to 12% each and every year for the major banks, including Bank of America. And although these analysts have set very low future growth expectations and are actually more on the bearish side, they still have Bank of America considered as a buy right now with a 2.2 current rating. So overall, one of the top major banks in the country and definitely worth taking a look at this current point in time. And now if we move on to the last bank we're going to discuss, by no surprise, it is ticker JPM or JP Morgan Chase. They currently trade for $152 and they are the largest financial institution in America with regard to total assets. And over the past year, the company has grown by 23% and their current market cap is at $459 billion. And they're also trading at a very low forward PE of only 14.3, and they have a current dividend yield at 2.4%. So JPM is the largest of the big 4 names we've discussed today, and they also have the highest current yield at this 2.4% level. And like the others, if we take a look at their Morningstar report, they're estimated to be trading right around their fair value mark, which is set at $153 per share. And we have seen throughout this entire video that all of the banks are trading very close or below their estimated fair value at this current point in time. And with the market being extremely overvalued and companies trading at sky-high valuations, right now, the banks may provide a great opportunity to get some good bang for your buck, collect some nice dividends with the potential rebound of the value plays going forward. And taking a look at JP Morgan's full 2020 results, they generated managed revenue of $122.9 billion, which was actually up from $118.5 back in 2019. So their overall revenue growth was very strong. Their overall net income did see a sharp decline, similar to Bank of America as well, but of course that is due to the reserves that they built up, which totaled over $12 billion in the last year. And going forward, JP Morgan has announced a massive share buyback program worth $30 billion. And that's just absolutely insane. Over the next 2 years, they're planning to return a ton of capital to their investors while maintaining a very strong balance sheet. And if we take a look, the current market cap for this company is at $460 billion, which means the company has plans to buy back between 5 and 7% of their total outstanding shares over the next 24 months. And taking a look, JPM is considered a buy with 4 strong buys, 16 buys, 6 holds, and 2 sells. And actually, if we take a look at their Zacks rating, they are the only company in this video with a 3, which is considered a hold at this current point in time. I do not agree personally. I think JPM is still a buy, and I think all 4 companies we've discussed all can be bought at their estimated fair value on the market right now, which is very attractive. And taking a look, JPM's current dividend comes in at 2.4%. Their net income payout ratio, again, is very low, making up only 34% of their net income, and they grow their dividend, averaging close to 16% per year growth, which is absolutely spectacular. And similar to Bank of America, Yahoo Finance analysts are actually very bearish on their future growth projections, coming in at just over 1% per year. And I don't think that's possible. I think JPM is going to do much better, and similar to Bank of America, anywhere between 8 to 12% per year over the next 5 years is where I am personally projecting the growth of these major banks. So overall, analysts all across Wall Street are bullish on the financial sector right now. They expect it to continue to rebound from the lows and climb to record highs throughout 2021. So definitely take a look at the 4 major name brands we went over today. We went over the 2 major investment banks, Morgan Stanley and Goldman Sachs. And of course, we also discussed Bank of America and JP Morgan Chase. Of course, these are no surprises. The financial sector is really dominated by a few top names. And I believe if you want exposure to that industry, going with the leaders may be your best bet. Some smaller banks on the market, I really don't like to invest in from my personal perspective. I just think the risk is too high for the little reward that those companies could provide. So as a whole, in the financial sector myself, I like to stick with the main players. I own personally both JP Morgan Chase and Bank of America, and I plan to add either Goldman Sachs or Morgan Stanley to my portfolio later on in the future. So please hit that like button, subscribe to the channel for daily videos. Let me know down in the comments which bank or financial institution that you own right now, or if you're planning to buy any more for your personal dividend portfolios. Thank you for watching, and I will see you in tomorrow's video.